where does someone get started with this? Like, what's the best place to kind of start with personal insurance? If you're like many people that are listening to this podcast and potentially a couple that are on it, where should they get started? Yeah, we won't. They couldn't be Grant and I. But the point I would make here is that I think insurance is the perfect combination of boring and complex. So for people to digest and understand that topic, it's like it's going to be very hard. They're going to put it off. But I think it's something that we unfortunately should, or not. Sorry, I should repeat that. It's something we shouldn't put off. And then understanding how to get started with it becomes really interesting. So is this something where engaging in conversation with your financial planner or several financial planners and shopping it is appropriate, or are they real specialists in this area people need to know about?
Look, I think just to answer your question there, Charlie, I think the first thing first, you got to sit down with an advisor. It's not necessarily about shopping around for it. The advisor does that part for you. So my role as an advisor, when a customer sits in front of me, when I've got the occupational, their lifestyle questions, what I'm trying to then picture is going, what does your health look like? What does your situation look like? What does your affordability look like? How much of a cash flow do you have? What kind of tax considerations I need to keep into account to make sure that if you want that policy, how can I make that policy a tax effective one? So that's the key start for a customer when he sits down in front of a customer. So always start with the financial planner. Once you've done that, the financial planner will then do the shopping around for you. Advisors are required to work in the best interest duty for the customer. So for me, when I'm shopping around an insurance policy for a customer, I'd go, a company X, company Y, company Z might give me X amount of premiums, but company X might have a certain features that is preferential for my client because he works in that specific occupation category. Whereas insurance company Y, Z might not suit that purpose.
Can I use a comparable is it a comparable example to see if this works? Would this be similar to like mortgage brokers with finding lenders? The idea being is like, all banks lend money, but like the idea that some have policies that's favorable for business owners and others do not. Or some have like, they love explosive experts, but others like, if you're a nurse, not going near it.
Yeah. And look, I think insurance companies do have a certain preference for certain occupation type, not to mention medical types. So if, as an example, if I had diabetes, some of the insurance companies won't touch me from bar of soap. They don't want to know me because consequently, as diabetes becomes worse, I may get a different type of medical condition, loss of sight, loss of limbs, if diabetes gets worse. Whereas some insurance companies would be okay with it. Some insurance companies would be willing to take those covers on. So it all depends on the appetite for the reinsurer, but also the insurance company.
Yeah, it's one of these interesting ones because I want to riff on this a little bit because I just there's someone in my mind that I just want to put in this scenario just because I feel bad for them and they're not the one talking into a microphone right now, I swear. So imagine that you've got a business owner who has a partner, or they might be in similar situations like Charlie's here, who's got a partner and a child. Now, when I look at my car insurance, I just go add partner. It's like a +1 on a wedding invite. And
it's
then
very convenient.
Super convenient. I tick that box and then I'd pay an extra $50 a month or whatever it is. Same with health insurance. It's like, great, let's go to the top cover and just go 2 people. We're a couple. I think we get a discount or they charge us more, whatever it is. Happy days. Is it the same when it comes to these types of personal insurances from where you see, or do you treat the business owner and the cover for a business owner very different to their partner, to their kid, or do you just sort of focus in on the business owner and what sort of it involves around them, and then the others can sort of go and sort of find their own solution to it? Like, how do you consider that?
Not at all. When you're considering someone's personal situation, their partner plays a huge part in it. So you can't just simply scope that out because you go, you're not a business owner, so we're going to scope that out. We can't do that. As advisors, we've got to ensure that we are covering the partner because that partner plays a huge part in the business owner's life. You take that support away from that partner, then it will impact the person's ability to run the business. So
wait, are you saying I should separate? You say you're being
That's what I heard. That's what I heard.
Well, what hints are we getting here, Ray?
That's not what I said, Charlie. Split. Well, look, I think whenever we look to cover the insurance for our customers, we consider both of their personal and financial situation. Financially, yes, it sometimes makes sense because you get multi-life discounts and some of those benefits. But we do take partner into consideration heavily. I think it's a big part of the insurance analysis that we take. especially
When you approach someone's insurance situation, I realize this is going to be like a hard question to answer and very circumstantial again. But let's say, are you trying to get someone insured to the level where it's like it might clear their debts? Or are you trying to get someone insured to the level where like your partner will be able to maintain her lifestyle for the rest of her life? Like, is there a goal with the insurance that you're trying to achieve? Or is that too layered a thing to be thinking about? Or I guess it depends.
It absolutely depends, Charlie. It depends on what person's goals and objectives are. What state do they want to leave their family in? So what it comes down to is, yes, you want to cover your debts. Yes, you want to provide for your kids' education, their universities, and you want to leave a bit of money for partner, but is it affordable? Can you afford that premium? And that comes massively into play, because what you can't do is diminish their cash flow.
Right, their retirement. To go a layer deeper than that, if a business owner has, let's say, built an investment portfolio as well, so they've got a portfolio that, let's say, can financially look after their partner, does the need for insurance policy coverage change here? Because maybe they don't need the ongoing lifestyle benefits. It would be more just clearing some debts or paying off the family home or something like that.
100%.
Or a goodwill kind of thing.
Yeah. So if they've got an asset, let's just say investment property is an example, which is completely paid off, that forms part of his asset protection mechanism where you take away that level of assets that they've already have. And you would go, well, instead of $1 million, you've got $500,000 of investment property, which is completely paid for. You only need $500,000. But
so this kind of acts as a bit of an insurance policy in itself, then.
Yeah. So it's basically you're having an asset and you're offsetting that asset because you don't need that level of cover. But again, it will come down to a variety of different situations, whether they have kids, but also how do you want to leave your family when you leave or when you're not around? If you were to remove that person from the equation, how do they want to leave their family?
Hey, fellow business owner, if this topic and value-packed short video has resonated with you at all, and you want to dive deeper into being a full stack business owner, check out the full episode by clicking the link on your screen or in the description right now.